Hey everyone, welcome back to Talk Tickers, your one-stop shop for all things earnings calls.
You got it.
We're diving deep today into New Gold's Q4 2024 performance.
And they had quite a quarter.
That they did. They had a really strong quarter, a lot to unpack here.
Absolutely. They knocked it out of the park on so many fronts.
Yeah, I mean, just to give you a quick rundown of their wins, they beat their cost guidance.
Yeah.
They generated a ton of free cash flow, hit key project milestones, and they also managed to extend mine life at both Rainy River and New Afton.
You know, that's a winning combo right there. That sets them up for a strong future, especially with, I don't have to tell you how favorable the metals market is right now.
Yeah, no, absolutely. And before we get into all the nitty-gritty details for those who might be unfamiliar with New Gold, they're primarily a gold and copper producer.
That's right.
They've got two main mines, Rainy River and New Afton, both located in Canada.
Good, stable jurisdiction, yeah.
So let's start with the financials. What were some of the headline numbers that really jumped out at you?
Well, I mean, you got to start with their revenue. They had record revenue in Q4, $262 million.
Yeah, that was a big number.
Yeah, driven by higher metal prices and increased copper sales volume. They're really taking advantage of that strong copper demand that's out there.
Yeah, makes sense. And they also had their highest production of the year and their lowest costs.
Yeah.
Which obviously leads to strong margins.
Yeah, impressive margins, really, when you think about it.
Definitely. Now, one thing that really caught my eye was New Afton. One of their key mines actually achieved a negative all-in sustaining cost per ounce of gold after you factor in their copper credits.
Yeah, that was impressive.
So for those who aren't familiar with all-in sustaining costs, that basically means they were making money producing gold. It wasn't costing them anything.
That's right. I mean, that's the holy grail of mining, right?
Yeah.
To have negative costs. It really shows that they're just incredibly efficient with their operations.
And Rainy River, their other major mine, also had a fantastic quarter. They generated $90 million in free cash flow in 2024 alone.
Right, which is phenomenal when you think about it, because that sets them up for sustainable free cash flow for years to come.
Exactly. So they're killing it in the present. But what about the future? What's their outlook for 2025 and beyond?
Well, they're expecting a big production increase over the next 3 years.
Okay.
Talking about a 30% increase in gold production and a whopping 90% increase in copper production.
Wow.
So they're not just, sitting on their laurels. They're really ramping things up.
No, that's incredible growth.
It is. And on top of that, they're also expecting their all-in sustaining costs to decrease quite substantially.
Okay.
I'm talking a projected drop of 64% by 2027.
Yeah, I mean, those are some pretty aggressive targets, but what are some of the factors that could derail this growth trajectory? Are there any red flags we should be aware of?
Well, there are always risks, right?
Yeah.
I mean, you got to consider the inherent volatility of commodity prices. I mean, those projections are based on where gold and copper are right now. But if those prices were to drop significantly, it would definitely impact their revenue and their cash flow.
Right. That's always the gamble with mining companies.
Absolutely. It's the nature of the beast.
Now, what about their operations? Are there any potential hiccups there that investors should be aware of?
Well, they are undergoing some pretty significant transitions at both Rainy River and New Afton, and any kind of unexpected delays or operational challenges could definitely impact their production timelines and obviously increase their costs.
Right. That makes sense. And then there's always the regulatory environment to consider.
Yeah, even though both of their mines are located in Canada, which is known for its, pretty stable political environment, you never know.
Yeah, things can always change.
Right. There could be unforeseen regulatory hurdles, permit issues, changes to environmental regulations. You name it, it can always happen.
Absolutely. So it sounds like there's some potential risks to keep in mind, but overall, I mean, they seem to be in a pretty good position.
Yeah, I mean, I think your strategy is solid. They've got a good track record.
Yeah.
I mean, they're definitely a company to watch.
Now, speaking of watching, I think it's time for our favorite segment.
Ooh, here we go.
The This Is Not Financial Advice segment.
Gotta love it.
Where we throw out some wild and crazy trade ideas based on what we've discussed.
Purely hypothetical, of course, just for entertainment purposes.
Absolutely. This is not investment advice. Please do your own research before making any decisions.
Couldn't agree more.
So let's say you're super bullish on new gold.
Right.
You think gold and copper prices are going to the moon.
All right. I like where this is going.
And you're feeling a little bit adventurous. What kind of bold, speculative play could you make?
Well, if you're that bullish on copper,
Yeah.
and you think both gold and copper prices are going to skyrocket, you know,
Uh,
a long-term LEP call option on new gold might be an interesting play. It's a bit risky, but Lapis, those long-term equity anticipation securities, they're options contracts with an expiration date further in the future
right.
than traditional options. So it gives you more time for your thesis to play out.
Makes sense.
And it allows you to leverage that potential price appreciation in both metals while limiting your downside risk.
Right. So you're basically betting that new gold stock price is going to soar.
Exactly. And if it does, you could reap some serious rewards.
But of course, if the stock price stagnates or drops, you could lose your entire investment.
That's the risk you take with options.
Exactly. It's a high risk, high reward game.
Absolutely.
All right. So a late call on new gold. This is not financial advice trade idea for today.
I like it. It's got a nice ring to it.
It's a spicy one.
It is. But remember, folks, this is just us having fun.
Yes,
It's purely hypothetical. Always do your own research.
absolutely.
And talk to a qualified financial advisor before making any investment decisions.
All right, well, on that note of caution and speculative fun, we're going to wrap up part one of our deep dive into New Gold's Q4 2024 earnings call.
Stay tuned for part two, where we'll delve even deeper.
We'll be back.
Welcome back, everybody, to Talk Tickers. We're continuing our deep dive into New Gold's Q4 2024 earnings call. Before we get into the nuts and bolts of their minds, I want to touch on something we briefly mentioned earlier, their commitment to ESG, environmental, social, and governance factors.
Yeah, ESG is becoming increasingly important for investors. They want to make sure that the companies they're investing in align with their values and operate in a sustainable manner.
Absolutely. And New Gold's been very vocal about their commitment to minimizing their environmental impact. They're investing in, technologies to reduce their carbon footprint, conserve water, promote biodiversity around their mines. And, they're also very engaged with local communities, creating jobs, supporting local businesses. They've got programs in place to ensure the health and safety of their workforce. They're really fostering a diverse and inclusive workplace culture. So it's not just lip service, it's embedded in their operational strategy.
It's great to see a company walk the walk when it comes to ESG. Now let's move on to the management team. Can you give us a little insight into their experience, their track record, their leadership style? What kind of confidence do they inspire in you as an analyst?
Well, the management team at New Gold's got a solid track record in the mining industry. They've got a good mix of seasoned veterans and fresh perspectives, which, is always a good thing. The CEO in particular has a reputation as a strong leader. He's not afraid to make tough decisions, and he's very focused on operational excellence and building a strong corporate culture. The CFO has a deep understanding of the financial markets, very conservative approach to capital allocation, which is important in an industry as cyclical as mining.
So a balanced team with experience, vision, and financial prudence. Sounds like a good recipe for success. Now let's zoom out a little bit, take a look at the competitive landscape. How does New Gold stack up against its peers in terms of size, production costs, profitability?
New Gold, they fall into that category of intermediate gold producers, which means they're not as big as the major players like Barrick or Newmont, but they're not small-scale operators either. They've got, a decent market cap, healthy production profile. In terms of production costs, they're kind of middle of the pack, not the absolute lowest, but certainly not the highest. Their commitment to operational efficiency, it's definitely helping to keep those costs in check. And when it comes to profitability, their margins are strong, thanks in part to their focus on those high-grade deposits and their ability to manage costs effectively.
So they're punching above their weight in terms of profitability. That's a good sign. Now, the mining industry is constantly evolving. What are some of the key trends and challenges that New Gold will need to navigate in the coming years? How are they positioning themselves to adapt and thrive in this dynamic landscape?
Well, one of the biggest trends we're seeing is the increasing demand for copper, driven by that global shift towards renewable energy and electric vehicles. Copper is essential for those technologies, and New Gold is very well positioned to benefit, given their significant copper production at New Afton. They're also exploring opportunities to expand their copper production further, which could be a very smart move in the long run.
It sounds like they're making strategic decisions to capitalize on those emerging opportunities. What other challenges or trends are on their radar?
Another challenge they're going to have to grapple with is that growing emphasis on responsible mining and sustainability. Investors and consumers are demanding higher standards from mining companies, and New Gold will need to continue demonstrating that commitment to ESG principles. To maintain their license to operate, they're doing well, but they'll need to stay ahead of the curve as those expectations continue to evolve.
Absolutely. It's a marathon, not a sprint when it comes to sustainability. So what else is likely to shape their future?
Well, technological advancements, they're playing a big role in the mining industry right now. Companies are adopting automation, artificial intelligence, data analytics to optimize their operations, improve safety, reduce costs. New Gold, they're going to have to embrace these technologies to stay competitive. They've made a start, but they're going to need to accelerate that adoption.
It's a technological arms race. If you snooze, you lose.
Exactly. And then, of course, there's that always unpredictable geopolitical landscape. Mining's a global industry. New Gold, their operations are subject to those political and economic conditions in the countries where they operate. They've got to be good at managing risk and adapting to change.
It's a complex web of factors, from commodity prices to technology to regulations. It's a dynamic environment. But from what we've seen so far, they seem to have a solid strategy and a good team in place to handle it.
I'd agree that they're a company with a lot of potential. We'll see how they do.
Now, before we move on to everyone's favorite segment, this is not financial advice. I want to ask, we've painted a pretty rosy picture. Are there any downsides or red flags investors should be aware of?
That's a good point. It's always important to look at both sides. They do have some potential downsides. One is their debt levels. They've taken on quite a bit of debt to finance their growth projects. They're generating good cash flow to service it, but it's still something to keep an eye on.
Right. Leverage can be a double-edged sword. What other potential drawbacks are there?
Well, their exposure to geopolitical risks. Both of their mines are in Canada, generally considered a safe and stable jurisdiction. But even in Canada, there's always that risk of regulatory changes or some unforeseen event that could disrupt their operations. Changes to environmental regulations, mining taxes, things like that could impact their profitability.
Right. There's always some level of political and regulatory risk.
Yeah. And then there's the fact that they're operating in a very competitive industry. There are a lot of other gold and copper producers out there. New Gold, they're going to have to keep innovating and operating efficiently to stay ahead.
Competition's fierce. Complacency can be costly. All right, so we've highlighted some potential downsides to balance out the positives. It's all about weighing the risks and the rewards, assessing your own risk tolerance, and making an informed decision. Okay, now for the fun part. This is not financial advice, where we let our imaginations run wild and brainstorm some outrageous but plausible trade ideas, purely hypothetical for entertainment purposes only.
Of course. Always do your own research. Talk to a qualified financial advisor before making any investment decisions. So what kind of wild trade idea are you thinking of?
All right, let's say you're a high-risk, high-reward kind of investor. You're absolutely convinced New Gold is going to crush their production targets and copper is going through the roof. What's a bold speculative bet to capitalize on that?
With their leverage to copper prices and that bullish outlook, you might consider a long-dated copper call option spread. You're buying a call option with a strike price below the current copper price and simultaneously selling a call option with a higher strike price, both with the same expiration date, several months or even a year out.
Okay, break that down for me. What's the logic there?
Well, the idea is to profit from a big increase in copper prices while limiting your losses. Buying the lower strike call option, you're betting copper prices will go above that. The premium you pay, that's your max risk. Selling the higher strike call, you're collecting premium, reducing your overall cost, and limiting your potential profit if copper goes through the roof.
So it's a calculated gamble, limited downside, but potentially huge upside if copper takes off. Not for the faint of heart.
Exactly. But again, this is hypothetical. Options trading is complex. It's risky. You need to understand it before you jump in. Always consult with a financial advisor.
Well said. This is purely for fun, exploring those possibilities. Welcome back to Talk Tickers. We're wrapping up our deep dive into New Gold's Q4 2024 earnings call. We've covered a lot: record revenue, growth plans, operational efficiency, their ESG commitments, strong management team, the competitive landscape, you name it.
And of course, we had a little fun with those speculative trade ideas, but, it's time to synthesize all this info and boil it down to the key takeaways. What are your overall impressions of New Gold, their performance, and their prospects?
Well, based on everything we've seen and discussed, I think New Gold is a company that is really firing on all cylinders. A lot of momentum, clear strategy, capable team, to execute that strategy. Their
Yeah.
financials are impressive. Their growth prospects look promising, especially with all that leverage to the copper market.
Yeah, I agree. I mean, they've definitely caught my attention. They're not just riding the wave, they're paddling, they're staying ahead of it.
Yeah.
Their commitment to operational excellence, their focus on high-grade deposits, those strategic investments they're making, it's all contributing to their success.
But, like we've been saying, no investment is without risk.
Of course.
New Gold is exposed to all those things: commodity price volatility, operational challenges, geopolitical risks, just like any mining company.
Absolutely. Investing's all about balancing risk and reward. And New Gold presents a very interesting combination of both. Their strong financial performance and that growth trajectory. I mean, it suggests some serious upside potential.
Yeah.
But, got to be aware of the inherent risks that come with the mining industry.
To sum it all up, compelling story, solid track record, bright future, but not risk-free.
Right.
So definitely worth keeping an eye on, adding them to that watch list.
Absolutely.
But you know the drill. Do your own research. Consider your own risk tolerance.
Mm-hmm.
Talk to a financial advisor.
Always good advice.
Now, before we sign off completely, got to indulge in one last, this is not financial advice segment, right?
Gotta have a little fun.
One last time, purely hypothetical, entertainment purposes only.
Of course.
Let's say you're feeling really, really confident about New Gold.
Yeah.
Like home run confident? Okay. And you're willing to take on some serious risk, looking for a way to potentially boost those returns.
Yeah.
What kind of wild idea could you consider?
Okay, so you're talking real conviction here.
Yeah.
High risk tolerance. Well, given their strong cash flow and those ambitious growth plans, one very speculative strategy, and I want to emphasize speculative here,
Yeah.
you could consider selling a covered put option on New Gold.
Okay. That's a risky one.
It is. It's not for everyone, but essentially you're selling the right for someone else to sell you shares of New Gold at a certain price. That's the strike price.
So you're basically betting that the stock price is going to stay above that strike price.
Exactly.
If it does, you get to keep that premium that you collected for selling the put.
Mm-hmm.
But if it falls below the strike price, you're on the hook to buy the shares.
Right.
Could be a loss if the stock keeps dropping.
It's a gamble. High risk, high reward. Takes a lot of confidence in the company. If their stock keeps climbing, you make good money from those premiums. But if it tanks, you could end up owning shares at a price higher than the market.
Not for the faint of heart.
Not at all.
But for those who believe New Gold is going to outperform, could be a way to amplify those returns.
Potentially, but again, just a hypothetical scenario, folks. Options trading, it's complex, it's risky. You got to understand it inside and out before you even think about doing it. And always, always talk to a qualified financial advisor before making any decisions.
Well said. Great advice as always. We've had a lot of fun exploring those possibilities. But that wraps up our deep dive into New Gold's Q4 2024 earnings call. Hope you found it informative, maybe learned a thing or two.
We got a few ideas.
Yeah. And, as always, thanks for tuning into Talk Tickers, your go-to source for all things earnings calls. Until next time, happy investing.
Happy investing, everyone.